All right, everyone. Welcome back to the Canadian Real Estate Homefront podcast. This is episode 15, and Brooke and I are super excited. We have Daniel Foch on with us today. And Daniel, who the hell are you?
You didn't even ask me how to pronounce my name before.
Is it bad?
No, that was perfect.
It was perfect?
I bet a lot
Usually-
of people pronounce it.
Well, I've listened to you speak
I get
before,
sworn at a lot.
Daniel
It's
Foch.
It's spelled F-O-C-H. So
And actually, like the European way of saying it is Foch. So, well, it's
Daniel
even
Foch.
more extreme than that. So.
you get sworn at a lot.
I'm the host of the Canadian Real Estate Investor podcast. I'm a real estate broker and director of economic research at a company called Rare Real Estate. Just recently also became partners in a commercial mortgage brokerage called Land Bank.
So you're doing a lot.
Yeah.
Yeah, I'm actually I don't really execute or work that much per se. You know what I mean?
We're
though?
doing
I
it
don't
right.
know, I'm kind of just help get deals and then hand them off to people far more capable than me.
Right.
It's interesting that you say far more capable because I feel like you're one of the faces that most people, you have a lot of trust on social media, I feel like.
Yeah.
And every realtor tries to put out social media
Yeah.
content, but you have built a trustable brand. And I think that's contributing to the success of being able to hand off these deals or.
Yeah, probably. Well, also because I realized that I would just fill my plate more and more and more, and I would start dropping balls. And the only way to backfill that problem was to find other people that could do them for me. And then I realized that it was actually easier to build a team that probably was better at executing than I was.
Yeah.
And now it's it's so easy, right? It would be as if you're an outbound sales company for a tech company or a whatever product, pharmaceutical company that you really, really believed in. I'm selling this pharmaceutical drug that I believe can change people's lives.
Yeah.
It's well, if I have a team behind me that I believe it can execute on real estate transactions better than I can, pretty good at systematizing stuff, but I'm not exceptionally good at time management or have a hard time balancing a lot of things.
I feel like you've always been good at the systems because even back, I think it was a couple years ago, I remember we were doing those, the HubSpot, then that connected to
all automated.
Zapier, and everything became automated on my computer. And I'm like, what is going on? So I think it's a huge skill.
Yeah, well, automated lead gen and inbounding systems for realtors is huge.
Mm-hmm.
Yeah.
Huge. If you get a lead, it should be contacted instantly, multiple times, right?
Right. I think that's where a lot of people lose.
Yeah, you know how many realtors just have and Jordan Skrinko, who's amazing at Facebook lead gen, talks about this a lot. He's I know people have thousands and thousands of leads that they've paid for 10 cents a piece and have never called a single one.
Interesting.
Yeah, that's interesting.
What a stupid business.
But do you believe in those companies that run your Facebook ads for you? And because realtors, they even ask me, where does your business come from?
Yeah.
And they say, do you run ads? Because there's a lot of companies that they do the calls for you. And once they, I guess, get an appointment, then they get transferred to you.
Yeah.
I think a couple people on your, in Rare do it as well because I see them advertising it.
Disturbance and stuff like that.
Yeah.
So for me, it's a little different. Well, it just would never work for me because I need to be in control of the narrative and the discussion from the start. That's why I actually prefer cold calls to anything because I set the tone of the relationship from the first contact. If somebody actually comes in from Facebook, if they're an inbound lead, then from my perspective, they're in control already because they reached out to you and now you're calling them back. But if you called them directly, I only cold call if I'm doing just listeds or if I have a buyer who actually actively wants to purchase in that neighborhood.
Right.
I try not to waste people's time. And then if I've reached out to somebody with that, then I started the conversation. I'm setting the conversation from the start. Whereas if I was taking a lead that's been handed off, that whole process of taking somebody from somebody you've never met, a stranger, to a friend, that's where the expectation is set from my perspective. Whereas if there's an expectation set by somebody else that I'm not in control of that discussion at all, it's a little different.
Yeah, it is interesting.
There's the psychology behind.
Yeah, I like it.
behind
Yeah.
all of it.
Content's interesting in that way too, right? Because people get to know you through listening to you speak. I'm sure you've realized this by doing content yourselves, and now it's almost like they already know
who you are.
Yeah. And there's a relationship established, especially with podcast format. They've been listening to your voice for hours.
So long.
Hours
yeah.
and hours.
Why do you think your content, I see so many realtors push content. Why do you think yours stands out so much more than other people?
Because I don't really have an opinion. I just tell people facts. That's it, honestly.
Right.
people on TikTok, like all the time. I mean, TikTok's hilarious. It's the most ruthless platform.
I know.
Yeah, so
I know.
ruthless.
I think it's like it's like it has to be like however quickly you can set up an anonymous account on any given platform is like directly correlated to the ruthlessness of it. 'Cause, like,
Yeah.
you give human beings anonymity and they just become complete assholes.
It's crazy. Yeah. They'll have 0 followers and
Yeah.
like no profile picture.
Yeah.
And they'll literally tell you you're the stupidest human being
Yeah.
and
Oh,
you should
yeah.
never sell real estate. But you're just anonymous. So
Yeah.
it's like, oh, you wouldn't say that to my face if,
Yeah.
if it was different. But yeah, I think too, like, I think even when I was talking to Brooke about like, let's do a podcast sort of thing, I loved how you talked about the economy and how smart you were with everything, rather than so many realtors just go, if you look at a chart of the GTA and the number always goes up.
Right.
And it's like, you know, no wonder you're not getting any retention from that kind of content.
Yeah.
Like when you actually talk about things that are meaningful to people like inflation and immigration, you make that connection, I think, almost where, like you said, even before you go into the door to sell their home, like you're already their person, like they already trust you.
Yeah.
So I think that's kind of like a key highlight that I took from your content, just watching in the background for so long. So
For sure.
Yeah.
It shortens the sales process too, right? Like you said, like a lot of sales is just trust building, but if the person already really trusts you by the time you show up, that's very helpful.
Very helpful too. Yeah. And you're always treating people like their money is your money. Like that's always what I try to imagine with
For
every
sure.
deal is like when I'm going to sell them, like I'm pretending almost like I'm buying this place.
That's
or,
fiduciary duty. Right?
yeah, 100%. But you know, a lot of people don't. So I feel like it's, you know, agents just get this bad rep because they're getting paid 10, 20 grand and they just can't wait to get that check. But when you actually like change your mindset, your business actually grows because people see the authenticity in what you're doing and they almost just recommend you to, you know, everyone they know. And that's kind of the best business, right?
For sure.
Yeah, ever since we started doing the podcast and talking about, like, there's so many more talking points too with clients. And I always go back to our job is so much of an educational, like we owe it to our clients to educate them, not only just sell their house, but make them feel like they're also making the best decisions for their future as well. And there's so many talking points this year since diving in and studying the economy more than I ever have, that clients, I think, appreciate that you know more than just putting a sign in the lawn and staging it and then doing a reel when you just want to see your face on camera.
Yeah.
So I think it's what sets you, for example, apart.
Well, he doesn't even advertise his listings, like you
Yeah,
said.
we were
Yeah.
just talking about you don't,
Yeah,
so
yeah.
you don't advertise at all.
Yeah, I
Zero.
don't spend money on like personal brand advertising anymore. I only advertise, like I'll pay to advertise listings, but not myself.
Right.
Mhm.
Well, it's interesting that you've grown so much with your platforms, and that's all natural. That nothing has been paid to.
Yeah, I mean, I did definitely, like, we spent a lot of money when I was with my family before on brand advertising, but we just don't anymore. And I think social media, if you do it right,
Yeah.
you don't have to.
Right. Well, even our account, people ask if we bought followers.
Yeah.
Like,
Yeah.
you
So,
know?
yeah. Our Instagram. Yeah.
Yeah.
I'm 30 years old. Like, I don't know how to buy followers. Like,
Yeah.
it's literally just like people like, how'd you grow so fast? Like I post myself, like I have no social media background. Like my Instagram has barely any followers, like my real one. It's literally just good content. Like that's what people love is serious, like authentic content.
Cortez texts me a screenshot of our followers every single day saying, "This is bananas." Every single
That's my go-to saying, "This is bananas."
Anyways, I want to change the topic a little bit because I think a lot of people respect you and respect what you have to say, especially like my friends mention your name all the time.
Thanks, friends.
Yeah.
Thanks, friends. So I want to talk about, I guess you said you don't share your opinion, but people just ask me what's going to happen. It's almost like this doom and gloom.
Bull versus bear.
Right. What's going to happen? It's like the world is ending. The world is not ending. I think people just are getting information from multiple sources and don't actually know. So in terms of, what are we today? July 10th, 2023. There's another bank announcement on the 12th. The job numbers already came out last week. How's the summer going for you? What have you been hearing?
I mean, I think a lot of it depends on the Fed right now. I mean, like there's a couple of things that are missing from the dialogue, like labor force participation is not talked about enough, right? Like a lot of people just left the workforce in COVID and stopped trying to look for a job. And now, that's like an indicator, like COVID's really an anomaly in that respect because there's no period in time when people just left the workforce at scale.
Yeah.
And so now that you're starting to see them re-enter, that's actually going to have an upward or create upward pressure on the unemployment rate, which we're starting to see in the US and Canada, even though like Canada added jobs, but the unemployment rate went up because more and more people were out seeking jobs. That's due to financial stress, sustained pressure under inflation, cost of living going up. You can't afford to not have a job anymore. I don't know how people afforded to not have a job to begin with, but you certainly can't afford to now. So that to me is a big question mark. But like from a setup perspective, like I've been saying this since like 2017, 18, 19, right? Like since we saw that correction and things didn't really bottom out, like 2017 probably would have been the end of the housing cycle in Canada, I think, had COVID not happened and the emergency rates.
Is that because of cheap credit?
Yeah, I think, well, you saw rates coming back up in 2017. And we like that was before we realized that we could go down to 0.25% overnight rate. Which like, I guess the only other time they did that was 2008. And yeah, I mean, you saw the run up, like your typical kind of like bubble bursts, big run up, big drop as a result of the non-resident speculation tax and interest rates coming back. And then you were trading flat basically until 2019, starting to ramp up a little bit again towards the end of 2019. And then COVID happened, the big drop happened, and then it was just.
So do you think cheap credit really fuels real estate prices?
Yeah, credit is everything, right? I mean, like it's just money supply and the availability of credit. Right now we're seeing a credit contraction. Like everybody wants to think that like immigration is like this binary thing where it's like we have more people than houses in Canada, and that if people can't afford to buy houses, which in order to do that they need money, then they'll just consolidate. And we're now seeing the number of people per household growing in the Western world for the first time in 100 years.
So like families are almost just like having to pool their money together because it's so expensive. Is that kind of
they'll have to. I mean, everywhere else in the world, go to like anywhere else in the developed world, even like
Europe, people
most of Europe, multi-generational households.
Totally.
You know, most of Asia, same thing, right? Like it's just like we just thought we could not do that forever.
Yeah,
that was what made North America so special.
Yeah.
It's like,
what's your take on these extended amortizations? Like I said to Brooke a long time ago, I thought that last year before they started doing this, extended amortization, this extend and pretend sort of thing, that we would see a ton more listings hit the market. And I thought that we would see more pain. And this extend and pretend that we're seeing right now, it's almost saving the market in a sense that like supply's so low right now. And because people are like, I can't move, like, or, how am I going to, I just have to like weather this storm. Yeah. So what's your kind of take on that?
Well, I think like my take is OSFI's take, right? Like whatever they're doing, which is right now making an effort to unwind those things. Like they're basically saying that banks have to get those off their books ASAP. Like they're trying to regulate them out of existence. That product's going to disappear. Like they'll make static payment variable rates obsolete.
Yeah.
Really?
Oh yeah, it's gone.
Well, because
give it like OSFI's next announcement will ban that.
Yeah, Ron Butler was saying that. I saw him say that on Twitter.
It extends amortization if you hit that trigger rate, right?
Well, but they weren't supposed to do that. Like the trigger rate was supposed to be a point at which like they're like,
put down more.
Okay, you're not paying principal anymore. You have a couple of options, right? Increase your payment, do a lump sum or whatever it was. But instead they basically just dropped it. So you're paying the legally permissible amount of principal.
Yeah.
It's a gray area. Right?
It's not even. It's like a violation of the Bank Act.
Yeah.
Like it is.
It's not even gray. It's a full-on violation. Yeah.
But I think like it was either that or like you said, like they force listings.
Like, and then you have these banks owning negatively valued homes. Like why would they want to do that?
Why would the bank doesn't want to force closing. They don't
want to own homes.
They don't. They'll do anything to.
They're in the business of lending. They're not in the business of owning
homes.
Yeah, unless you like really dive into like the TikTok like own nothing and be happy people. Where like this is like a mass like rug pull and like the banks are just gonna take everybody's houses and whatever. It's like who knows, man. I mean, I think that Alan Moore, the guy who wrote The Watchmen, like which is like a really cool graphic novel. He has this quote that basically says that, well, it ends by saying the world is rudderless, but basically that like people want to believe conspiracy theories.
The world is
rudderless, like nobody's in control. Yeah, people want to believe conspiracy theories because it makes you feel like somebody's in control.
Yeah.
Whereas like the truth is far scarier that nobody's in control.
Yeah. Nobody knows. Yeah.
Interesting. Maybe I'll have to check that one out.
We talked about this kind of before we started the pod, but like your take on immigration, because we both kind of have this feeling that, everyone was so like pro-immigration, let's grow Canada. let's do all these things. And now the reality is we're letting in so many people that it feels like our healthcare system is getting a lot of pressure. Our housing system is getting a lot of pressure. I think inflation too, like food inflation, everyone needs to eat. Everyone's going out there and buying. So like the goods are getting almost, scooped up by more people. What's your kind of take on immigration? Are we letting in too many people too fast? I guess is
I don't even know if that's like the part of the conversation that's worth focusing on, because it's like it imagines like an us and them mentality.
Right.
It's like everyone gets screwed by this current system, including and especially the immigrants in those cases. Like the way that the student system is set up in Canada, like the way, you can come here and become an international student and pay like triple the tuition. So you're overpaying for your degree basically. And you're allowed to work a certain amount, and you're basically forced into this position where you can't really afford the degree. And you have to work to do it, and you're from a different country, so you don't necessarily know the wage expectations for that job that you're doing. And so it's really kind of broken things from my perspective. And I think we're not necessarily giving out a good version of what I think a lot of people come here for.
We were saying that a lot of people that came here for growth in their, I guess, schooling and a better future, like a better job. There was a high percentage of people that ended up working like a very modest
retail
job, with their degree that they came here for, expecting to, get into.
You're setting people up for failure, I think, is kind of where we're going with this.
Yeah, or like not even setting them up. Like, I think as soon as they come here, they're kind of like, it's just like, I think people end up disappointed, right? Like, we go through like, I watch like a lot of like these immigration like TikToks and stuff like that from people who like talk about their experience moving to Canada, and like the threads are just like, the comment threads are just like, don't move to Canada, don't move to Canada.
Don't
like,
do
whatever,
it. You know what?
That's interesting.
A lot of them. So we looked at the highest, like where everyone was coming from, and the highest was from India. And a lot of people say, don't move to India. It's not or don't move to Canada. It's not what you expect. But then you actually look at India and what it is like to live there.
Yeah, no.
Your quality of life, even if you're struggling there too. You're coming from India because you're struggling. The quality of life is a developing country, a third world country. You come to Canada, yes, the cost of living, the cost of food, the cost of everything. It's hard to make it, especially as an immigrant. But Canada's beautiful. So that's something too that, people are like, don't come to Canada. But then what's their alternative? Stay in India?
Well, I think like statistically, if you're below the poverty line in Canada, you're still in like the global 1% of wealth, right? So like, it makes sense. Yeah, I get
that's what I mean. Yeah. Being in Canada versus some of these cities in India that people are emigrating from to come here, I feel like you're still on it.
Yeah, you can understand the appeal for sure.
Yeah, you can see the numbers change too pretty drastically, like where people are going in Canada. I was surprised too, because everyone talks about people just moving to Toronto and Vancouver, but I think it was either the East Coast was seeing huge growth, like PEI and Halifax was seeing huge growth. Yeah. And again, it's hard to pinpoint why, but I think it's pretty obvious that housing is just a lot cheaper out there. So,
affordability is
affordability's there. So
for sure. Yeah, I mean, you're seeing a ton of interprovincial migration as well, right? Like Ontario is at record, like every month hitting new record outflows, and Alberta is hitting new record interprovincial inflows.
Yeah. Calgary's the only one seeing growth right now, I believe,
on
right?
The price side, or
sorry?
On the price side, or
price side. Like they're seeing like their market's still running and still going. I guess, again, I think it comes back to that kind of cost of living, right? It's just, you look at the average house in Toronto and someone saying, I'll just pack it up and go. I had a client move from Burlington and they had
multiple.
It's worth the risk.
Yeah, it's worth the risk. Like they just said, there's not a lot for us here that like is keeping us here. We want to buy our daughters a condo and kind of set them up for the future. Yeah. So they sold the family home here, made more money than ever expected, went and bought something for like $500K, and then now they're buying a condo too. So
it's such a beautiful city too, right? And you can you can drive outside of the city in 45 minutes and go for a hike. It's a nice city.
I was listening to a Calgary Realtor talk, and he said that you could get like a beautiful home, like a 60 by 120 lot, and you could be 30 minutes from Calgary, and you could get it for about like $500-600K.
Yeah, it's insane. It's crazy. It's so much different because we talk about the cost of living a lot in Canada, but then when we broke it down, remember, from city to city, it didn't seem as unaffordable as everyone talks about. And it's because we're biased. We live in Toronto. It is very unaffordable to live in Toronto, like wildly. But then when we talked about New Brunswick, Nova Scotia, PEI, Manitoba, Alberta, like it just became not as crazy on that side.
Yeah, not as doom and gloom.
But I mean, a lot of the jobs are here, a lot of the opportunity, a lot of the schools. Most of our top universities in Canada are in Ontario. So if you're coming here for schooling or even for a highly recognized job. Like Ontario, Toronto is probably among or the top city of where you'd want to be.
I think so. Yeah. Like, I mean, I think people generally, like, if you exclude the economics, like, this is where people want to land. And then I think when they either realize that the economics don't work and they go somewhere else, or, you know, they become Canadian and they start realizing the other places there and, oh yeah, maybe there's, you know, something more somewhere else. Right. I mean,
what about the, so our oil reserves, like that's not something that Canada, it's like open for jobs. It's not like that is a lot of potential income for Canada.
I think
jobs.
Natural resources too. We'd love to give your take on that. Like the Looney Hour talks about this a lot. I'm not sure if you watch their episodes, but yeah, they talk about how Canada is just like an untapped market and they really need to like, you know, get jobs going and use our natural resources to export to other countries and create more jobs.
For sure. Yeah.
Yeah.
I would agree. I mean, I think like from my perspective, we have relied on housing as a driver of the economy for a long time, and immigration with that. Like, immigration is your demand curve for using housing as your major driver of the economy. We're seeing what the problems that get created by that, and if you want to have a healthy, growing economy for the foreseeable future, then you need to diversify the economy. I mean, right now the OECD predicts that Canada will be the worst performing economy on GDP per capita growth for the next 40 years.
Can you explain that to our listeners, what that means?
And I want to put in a comment before you, because, and not to say that my dad likes to fight me on my opinions a little bit. And he said that we were among the top of the G7 for GDP growth.
GDP growth, yeah. But GDP per capita is...
Okay, per capita, we're the by far the lowest, but GDP growth. So then let's relate those two together.
Sure.
Because we're number one in one sector, and then I guess the bottom and per capita.
Yeah, so GDP is your pie. Let's say you're having some friends over for a pie party, and you want to feed them all pie, right? And you make... You know, you're having a couple friends, so you make a big pie, and then, you know, one extra is coming, and you're like, oh shit, now I'm gonna make a little bit more pie. But then, like, one of your friends, you know, brings 10 other friends, and now you all have the same, you know, big pie, and you're cutting it up between significantly more people. And so the cutting it up between more people part is the per capita piece. And the more pie, from my perspective, is growing the economy in organic ways. I mean, I think we're exceptionally well positioned to be a major global force, honestly, like Canada is, from a resources perspective. I think it's just like we lack I don't even know if, like, the political leadership is one thing. Yeah. I try to stay out of that whole discussion, but I think political cohesion is another thing. Like, there's a lot of disconnect between the multiple levels of government, and everybody's solving a different problem that relates to one another. You know, municipalities are preventing housing from being created, right? Provinces are preventing infrastructure from being created at scale. Federal government is increasing the demand curve in a way that's just completely unsustainable. And so, you know, if they were working together in a better way, it might actually be achievable, but it's just not happening.
So our GDP is growing because our population is growing in a sense, but our per capita, people are less productive in terms of bringing value to the economy. That's kind of what you're saying.
Yeah, the economy is growing.
The party's growing, but the same amount of pie is there, so we're just splitting it up, sort of thing. I get that. That. And it also, like, we're the land of oligopolies. Like, we literally, I was on a Swoop flight yesterday, and it was like WestJet bought Swoop, and they're getting rid of it. And you know, these are just more, you know, Canadian companies.
WestJet always owned Swoop.
Yeah, but I think they're just getting rid of it now, so you have to fly just WestJet or something like that. Yeah, they bought it I think they bought it recently. But anyways, it's just, you know, almost like all the cell phone companies. We talk about this, all the grocery stores, you know, we just don't have competition. But when you have competition, and I think you guys would agree with this, then you have more job growth, you have more companies wanting to come to Canada and spend money. But, you know, if you just look at our cell phones, how many companies are there? There's like Rogers owns Fido, and like, you start digging into it, it's really just these 3 or 4 big companies, and that's why cell phone bills are so expensive.
And anything important in Canada is oligopoly, banking, telecom.
It was interesting how you said that too. You said that housing has been such a driver of the Canadian economy, and then also people love bank stocks too, right? Yeah. So it's just like another.
Well, that's housing too.
That's just
right?
It's just housing as well.
It's mortgages, right?
Yeah. So I think our economy is very at risk of potential hurt because, like you said, we're not diversified.
It is interesting from my perspective, like a lot, you know, this Wall Street bets shorting Canadian housing thing, right?
Yeah.
Like, and I was like, when it first came out, you know, like I did a a couple of videos on it, and they did pretty well. And then I was arguing with people in the comments about it and talking about like how, I mean, Canada's banking system is strong and it's resilient, but we really only have 2 GSIBs, globally significant banks, RBC and TD. So, I mean, the 4 remaining big 6 could actually not afford to fail, but like you could see, actually it's funny, I'm wearing a Credit Suisse hat.
Yeah.
You could see something like that happen. And Credit Suisse was a GSIB, right? A globally significant financial institution. And there's those banks of that scale and size are subject to a little bit of a different rule. There are different rules. They have higher capital requirements and whatever. But I thought that the whole like Wall Street bets shorting Canadian housing was a little bit like far out. And then like a couple of days later, OSFI started like going after CIBC.
Yeah, I heard about
stuff
that.
like that. And so, I mean, and then now you're starting to see like these like demand letters basically going out from lenders that they're all like soft calling people on lines of credit and reducing. Oh yeah. It's
How can they do that?
they can do whatever they want. Like
Yeah.
read the
okay, so
contract.
you-
Yeah.
I guess so. So
Yeah.
you have, let's say you have a HELOC.
Yeah.
Can I just say pay back now?
Yeah, so somebody sent me one from an unnamed bank. I try not to name any banks, but a big one. I mean, I guess there's only 6 you could guess from. That basically their combined loan to value between their HELOC and their house was
Over.
it was higher than they were now allowed based
Yeah.
on I don't know whatever. I guess they just run some new numbers on random economic assumptions, and they were making it so that the person had to get into the proper leverage position.
Interesting.
Yeah.
Well, so when I had a mortgage and a HELOC on my house, and then I was like, I need to refinance all this because my HELOC is 20 million%, and it needed to appraise. So that's also it needed to appraise at 80% loan to value, and then things crept up a little bit in Hamilton. So thankfully it did, but at one month it didn't. So in a situation like that, where if it wouldn't, the value's not even there. So if they call my HELOC back and I sell it, and I don't even have the money to cover the HELOC from the sale, like what do you do in that case?
Well, you wouldn't be able to sell realistically, right? Like unless you'd have to write a check in order to sell, because you'd have to you'd have to pay
disperse
out.
both of them.
Yeah,
You'd be out of pocket.
Yeah, and there's a lot of people who just can't do that, right? Like, I mean, and this is the part with like first time home buyers. Like I was saying from the start of like this COVID stuff, and like a lot of people aren't gonna like this, but
Let's hear it. I love it.
Yeah. Everybody's like investors are the problem in the market. The problem in the market was that you had a bunch of people who had FOMO, first time buyers especially, who had realtors who were brand new in the business.
A lot of brand new realtors in COVID.
Who have done 1 or 2 transactions. So you get people who are in the highest leverage position, stretching themselves the furthest financially to buy a house, who have the worst advice in the market. It's like, if you want to understand the rocket fuel that happened between 2020 and 2022, it's right there.
Yeah.
Like, something like 25% of millennials purchased a house during the pandemic.
Yeah.
Everyone
many were on variable rates too?
Everyone wanted to buy a house. It was like this.
Yeah.
Yeah.
For sure. Well, it was like a lot of it was that impulsive, like getting out of the cityness, right? It's such a mess from my perspective. And the craziest part is like if somebody's buying with a 95% loan to value, which like a lot of people were, right? Like if you're buying CMHC insured 5% down, you're in a negative equity position as soon as you close on the house, right? You 4% CMHC
Right. So it
premium
goes higher. You
stacked
owe
on.
higher than what you purchased for. Yeah.
Yeah. So 4% CMHC premium, you got now 1% equity. If you need to sell, you got to pay 5% to a realtor, right?
Yeah.
And then you already paid, that's excluding land transfer tax, and
Lawyer fees,
everything on the way in.
Moving expenses. Yeah. There's so many things. And I think there's more pain to come. I don't think
100%.
there's no doubt. Like people are drowning in their variable. How long can you hang on for? And even like, I think the bond yield is at 4% or close to it today.
Yeah, it almost broke 4 on Friday. I
Yeah.
was watching it all day.
So now we're looking at a 6% interest rate. You're stress tested at 8. I mean, something's got to give.
Yeah, I think it's just time under tension at that
Yeah.
point. Like, and if you ask me, I think you started with like what happens. Like the trajectory of this, from my perspective, is like it's almost an identical setup to the 90s. And our parents' generation all were fine at the end of the 90s, right? Like a lot of them don't want to touch real estate as an investment now. They saw
I
what
know.
happened.
Yeah.
Get a
Yeah.
baby boomer to buy an investment.
For sure.
Right.
Yeah.
You're
And
not
I
doing
think
it.
that's like what we need to go through. We need to go through that entire pain cycle where people, like not everybody in Canada wants to buy an investment property.
Right.
Yeah.
And I know firsthand how many people that is because I run a real estate investing podcast for Canadians.
Yeah.
It's everyone. Right?
So on my story on my Instagram today, I was looking at recent sales this month where they bought. So they sold this month, but they bought in 2022. So I don't know what it is that made them have to sell, but how many of them lost money. And not only would they have lost their down payment, assuming they put 20% down, but some of them bought for $960, sold for $780. So there was probably like 30 I could find that sold this month.
450% increase in the overnight rate. You know what I mean? It's just,
and then you essentially,
painful.
you lose your down payment and then have to actually contribute to paying off the mortgage. And then what do you do from there? So I'm seeing all these and I'm like, these aren't really talked about that much. People are like, oh, the pain is going to come. Well, seeing those ones, I'm like, these people
are feeling pain.
But the thing is that they can sell. So if you do put 20% down and then you have to sell, you essentially lose your down payment that you've put in, and then you can walk away and maybe you can just continue to afford rent. So all you're doing is losing your down payment because the market is still moving. Like you can still sell your house right now. There's some, but houses are selling.
Yeah.
Number of sales, they're moving.
As long as listing volume stays low, right? Like we've been pretty supply constrained.
Yeah.
So stuff will move. Like we don't even really know how big the demand is right now because we don't have enough supply to set, because we're still running at like 30-40% of like peak market volume.
Yeah.
Like it was, I think we saw volume was up year over year from June to June in Toronto Real Estate Board, but it was also like June of last year was like record low, right? Yeah. That was like right in the middle of 20% drop in house prices.
Yeah. Oh, that was a crazy time.
Yeah. I recently it only goes up. Yeah. That Realtor on TikTok, it's their first year and they're
when we were talking about the how many people are coming up to renewals at the end of 2024, 2025, massive numbers we were saying.
Yeah.
So everyone again is expecting this doom and gloom and this pain. And I actually got a couple of questions today when I posted these negative, like the sales way below what they bought for a year later. And they're like, so do you think the market's going to crash? And it's like, well, it's already very much corrected. The supply is low. There's going to be a lot of people coming up to renewals and maybe have to do what I just posted today if they can't afford their new mortgage rate. But that question is hard to like answer. And I know this firsthand because my prediction of what COVID would do and it went the opposite, right? What do you think?
I think like people will do exactly the opposite of what the right decision is.
I know. That's why it's hard to predict.
If you look at like mutual funds, like mutual fund flows, like it's literally like the way that retail or like the sheep, you could call them, they perfectly time the tops and the bottoms to the inverse. So they do the exact wrong thing. Like people throw money in at the top and they pull money out at the bottom. Right. So what will happen is, and I think real estate is exceptionally interesting because it's retail and emotion, right? So you have this aggregated animal spirit of all of consumers, but it's also like their house and it's an emotional buy and there's leverage attached to it. So it's like the consumer psychology of it is really fascinating to me. My guess is that people will hang on as long as prices are going up and they're not anymore, right? Like month over month. And I've been saying this since the beginning of the year. I was like, people are like, oh, prices are going up. It's like, well, they always do from January till May. And then they drop from May till August.
Yeah.
What are you going to say or do when prices are going down for 3 months in a row on average? Because that's just seasonality. Like we're in a sideways market from my perspective. We have been like, we're probably on the bottom, and it's just, you ride that up and down for a little bit. You look at the 90s, 89, saw a big drop in house prices, 18%, biggest drop in Canadian history until last year.
Yeah.
Then you just and then you saw a 10% run up in 1990, little bull trap, and then it dropped back down and corrected for all of those gains, and then it kind of grinded down like 5% over 4 years. Took 12 years to get back to that 1989 price. If you just 89 to 2002, 13
12
years. 13 years. If you adjust that for inflation, it would have taken until 2012 to get back to it. I literally think the setup is identical, and people keep saying, "Oh, like immigration's higher now." It's like, no, proportionally, it's literally the exact same. Like the last time that we broke, or the last time that the year that we set the immigration record that we just broke at 1.81%, or population growth rate record that we saw at 1.81% was 1989.
That's interesting.
And that was,
it's a replica.
Well, I think Canada needs that cleanse.
So if you say we're at the bottom,
I agree.
Yeah.
then
I'm not saying we're at the bottom, but I think
Yeah.
that I think that the bottom is long and flat, and I think there's
yeah,
probably
there's
another.
gonna be dips and ups
Yeah,
and
like
downs.
we just went up 10%. I think that's going to get erased, and then I think we're going to see probably another. I think there's probably another 5% downside below that 10% that.
I think you said this. You said that markets don't have to be binary; they can actually trade sideways because everyone focuses on it's either got to go up or down. So
Right. So then, because people always want to time the market, like, are you buying investments right now? Like,
we bought a lot.
Yeah, and I see that. So people are like, it's not a good time to buy. The market's going to crash more. And I'm like, that's bad. Like, to time the market, don't do it. Yes, credit's high, but like as an investor or to share to your investor clients, like now's a good time to buy because of where we're at with prices.
Not really, no. Like, I mean, it's never a good time to buy a bad investment, right?
I like that.
And nothing in the Greater Golden Horseshoe is a good investment right now, right? Like,
why?
Is it cash flow positive at 80% loan to value? No, right?
Okay, and if it was,
then it would be a good investment, but it's not.
Yeah.
And
so the market times itself, really, from my perspective. So I can buy in certain markets that I couldn't buy during COVID because they had run up, and now I can buy in them again because they all came down when rates went up last year.
Yeah.
And we're buying at 7 caps, and we're borrowing at a 6% interest rate, and the cash flows, 30% positive.
Cap.
Yeah. There's 7 caps in
I tell you that all the time, and you're like, I want to buy in Hamilton because it's going to go up. And you never listen to me.
Well, they do well for me in Hamilton, and I know the market.
No, I'm just joking.
Running a cap rate is very much more like you're talking more than 2 and 3 units at that point. There's more going.
You're probably that's probably
your bread and butter. Is
we bought some like
multifamily.
The biggest we bought is like a 10 unit, but we try and focus on stuff that's like too small for the big guys and too big for the small guys.
Yeah.
Fourplexes is like triplexes is really like what we like. Yeah.
Yeah.
So you said you were doing lending. So I recently got into private lending, and the returns are really good. And like, you analyze the deal and you basically see, you definitely want the loan to value to be, 80% sort of thing. So, but they pay a really good interest rate because people just can't get money from the bank. You get to see their
interest rate.
They pay so I get paid 14% on my money.
Right.
And I analyze the deal, I feel good with it. The guy that I work with feels good with it. I see they own other properties. I see the property and stuff like that.
You registered against one of their other properties? What's your leverage?
So yeah, I'm basically on title.
You're on title of one. Okay.
Yeah, of the home. Yeah. And it's me and other investors. So it's not just, sometimes it's the first.
So
right now,
the first.
Right now I'm on the first with a bunch of a pool of investors, and we're all getting paid 14% on our money. So it locks up for a year. Basically it's a bridge until they can try and get a loan with the bank. So you said you were in lending. Do you kind of do the same thing, private lending, or like do you just lend from the banks as well? Like, what do you do when you buy?
Yeah, not that kind of stuff. Like, we do ADU financing, so like a lot of missing middle stuff. So like give people construction debt to build a basement apartment or garden suite, or right. Like one of my personal policies or like vision for what I want to do with what I've created here on social media or whatever is create more housing. And we have Bill 23 coming in. You have provincial MTSAs coming in this week, likely. Toronto just legalized fourplexes. So it's like literally just construction debt for people to build units.
So someone owns a home, they contact you and say, hey, I want to build this unit.
Yeah.
Do you help them like with what the plan should be like? Or you just say, hey, here's the money?
No. So like, it's tough. Like, well, we work with approved contractors only. So like in Hamilton, it's Joey as an example, and we just trust their judgment, and the draws end up going to the contractor anyway. And on the way in, it's underwritten in such a way that the borrower has to be able to service the loan. Like they'll have to get a takeout loan. They have to have a pre-qualification for the takeout loan. So like to have a bank take out that construction facility, the construction loan, and then it's paid out in draws, right? So investors love it. We like it because you're not putting $100K out at once. You're putting $10K out a week, right? As an example, to pay for the construction of that unit. And then, it's basically, do the rents service the cost of that loan? And do they service the cost of the new mortgage to pay out that loan?
Right.
And they almost always do, unless somebody's in a stupid leverage position to begin with.
So does it get reappraised and then they pay you back?
Yeah.
With interest?
Well, yeah. And typically basement apartments and garden suites are appraising at like a dollar for dollar basis. So in a lot of cases, the appraiser will just say, can you show me the construction budget for that unit? And I'll just basically add that in because it's brand new. It's not depreciated at all, right? And so it just gets added into the value of the home.
So they're just
But
taking
dollar for dollar though. So if you spend 50 grand, it's going to add.
Yeah,
50
it should
grand.
hypothetically, like from an add value perspective, like real estate you should actually be able to create value by renovating.
Right, and that's
But
my
appraisers, right? It's so new, I think, like they're just appraising lower than they typically would. But that's fine. Like once we can wait for that precedent to be set that a garden suite will add value to a house, which I don't know whether or not they actually will. Right.
That's an interesting idea too. I don't know either. Like
Yeah.
a lot of people want to do it in Hamilton for the cash flow perspective. If you run the numbers that way, okay. But how much more is it going to be worth if your garage is actually a livable unit?
Mm-hmm.
I think it's like almost like we talked about this earlier, how it's like multifamily now. You're almost like, would I buy this place because there's a garden suite for, you know, my kid to go into?
Yeah.
Almost thing. I think
Well, it
it's
makes
yeah.
household consolidation easier for sure.
Yeah, like instead of you paying $2,500 in a condo in Toronto, like why don't you come live in the garden suite? I'll give it to you for $1,200 a month, and we can all be one big happy family.
Yeah, for sure.
But yeah, it's interesting.
That is interesting.
Yeah,
I don't know
yeah.
how I feel about
So
that.
what do you think about rates going forward? Let's kind of shift there.
Next rate announcement on Wednesday.
I think that I always say this, it always takes data to understand it. It's
Yeah.
hard to say a year out what's going to happen because data always changes. But
Were you surprised when they raised it? Sorry to cut you off.
No.
You thought they were going to.
Yeah, I think they'll raise again.
that's what I said. Yeah.
And you think they'll raise again?
Yeah. They have to kill inflation. They have to.
Yeah, the only way left to do that is to
raise rates.
Yeah, was to go into a recession, really, right?
And yet they want a recession.
I think so. Like, I don't think they wanted any, like, I don't think they ever wanted it, but I think it's the last, like, there's no other place to go. Like, you're forced to overshoot at this point because they've been raising rates very aggressively for well over a year. And like, there's a 12 to 18 month lag on the impact of rate hikes, but we're still seeing so much strength in the economy. And so if they're going to keep hiking as a response to that, and then we start seeing the lagging impact of the rate hikes happening, then, I mean, even if one extra hike now 12 months into the hiking cycle is technically an overshot, right? And I mean, Ben Tao says it best, right? He said, like, if they had to choose between recession and inflation, they would choose recession every time, right?
Why?
Well, because inflation is like completely debasement of your currency over time, right? Like, and that takes away like what makes it like,
right.
but it's not even just purchasing power. Like, this is like faith in political system, faith in the economy. Like, if you're go like look at Venezuela, look at the Weimar Republic, like
100%
that's an economy burning to the ground.
Yeah.
Seriously,
Their money is literally in the streets because it's worthless.
Yeah, and like that's how you get like people. Why would people have faith in political institutions? Like, it's hard to control people when like they don't even know whether or not they can. Like, they're coming up with their own mediums of exchange in real time barter systems because you no longer have like the one thing that tethers the government to control, which is this medium of exchange that they've given you, this like artificial thing that they've convinced you is worth something.
It's worth something
to measure, your like exchange of goods, and that's the system that they've created. And if the value of that just is getting completely blown away.
And this might be controversial too, like, but to add to your point is like when you look at those economies, you see crime,
right?
And you see, drug use jump up. And if you look around Canada, look at the TTC, you look at Vancouver, that's what you're seeing. You're seeing these kind of cracks in the economy, and it could all stem from money. I don't know for sure, but
well, I mean, there's data on that. Right?
Yeah. So that's a really great point. That's a good nugget.
There's a big sentiment in what a recession, because people think a recession is like, oh my gosh. So I think the sentiment of being in a recession calms people down a little bit too.
Yeah, maybe. I don't know. It's tough to say, like, because like I always like use the Cardi B thing as like an example. Have you seen her tweet? She's like, when do y'all think they're going to announce we're like going into a recession?
Yeah, I did see that. Cardi B's talking about it.
I love Cardi B, but yeah, I mean, from my perspective, it's like I think that they've been trying to avoid that and saying, oh, we can get by and whatever, but they just kind of like inch you closer. Like, I think that I maybe they're not wrong. Like, I think the government's always been trying to avoid panic like the entire time. But our generation really hasn't seen a real economic downturn, at least in Canada, in like our adult lifetimes. I mean, even in the US, like most people our age would have not really been like adults in 2008, right?
Yeah, no, it's true. I actually really had to force myself to think back, and I talked to my dad about 2008. And yeah, he's in like capital markets and mining, and he lost 3 different jobs at that time. Right. And I didn't even understand like the financial stress, because he was a single father, the financial stress that he probably had, losing a job, and then getting another one, then all of a sudden losing it again. And you really, you really don't know what it's like to be in a recession if you're not, like you said, like an adult in our
Yeah, and Canada got smoked comparatively in like the 90s recession. I mean, if you look back at '08, like the US was forced to solve their leverage problem, and they fixed a lot of the issues. Like, I mean, there are some issues happening in the commercial real estate space. That's not really a leverage issue. That's a secular shift issue that work from home is just changing the nature of the commercial asset class. But in Canada, we didn't solve our leverage problem. Right. Actually, in fact, it got far worse because they made debt so cheap during that period of time by dropping the overnight rate to 0.25% for the first time ever in 2008 or 2009. And then basically Canadians just got hooked on credit the same way that the US was during that period of time.
Yeah.
And now, like household indebtedness in 2019, just before the pandemic, peaked in Canada at like 117% of, was it 100 debt to disposable income was 117%. And then it dropped off during COVID because everybody's getting CERB and mortgage deferrals and not spending money on stuff. And household savings rate went up and credit card debt went down, and now they're inverted.
Now they're reversed.
Yeah. Isn't it every Canadian owns on average $1.80, and when they take home $1 or something like that, they owe $1.80 on it. Yeah. So yeah, we have a leverage issue for sure. I can agree with that.
And it takes, like, your economy can't be productive at current rates with that much leverage, right? It takes a long time to get that out of the system. And it needs to be Darwinistic. Like, people need to get smoked. Like, a lot of people who made bad decisions shouldn't have done that, and they need to learn the hard way, unfortunately, so that they don't do it again, because it's not good for the economy.
What does Warren Buffett say? When the tide goes out, you see who's swimming naked. That's what we're
having
need.
Our swimming naked moment right now.
We're having our swimming naked moment.
Yeah, that's it's eerie, but it's true. It's something
the
that
rates are going up again on Wednesday.
People need to. Yeah, I think so. Yeah. I think they're going to stay higher than people think for longer.
Yeah, I think. Well, we've never been through like an inflation regime, right? Like the last meaningful inflation regime was like in the 70s.
Yeah.
But now we're in one. Like, I mean, and if we see persistent inflation and rates have to stay high for a long time, which like a lot of people, like, things that people don't really get, especially in Canada, is like immigration is inflationary, right? Onshoring of manufacturing is inflationary. It's great for the economy. Things that are great for the economy are inflationary. Like when the economy is doing really well, that's inflationary, right? Like, and you have to, like, has to be somewhat corrected. And I think my guess would be we get inflation down to like 3% range. I think base year effect will get it down to 3%. I mean, right now, like we talked about, mortgages are almost a third of total inflation right now. So once we get past those couple of rate hikes in the curve last year, then when your inflation by the end of this year will easily be in the 3% range.
Yeah.
It's base year effect then becomes a problem later on, because now all of a sudden, if things aren't moving down, then or if they're still moving up at a relatively ordinary pace, then inflation becomes sticky, right? And getting it below that 3%.
From 3 to 2 will be the hardest.
Yeah.
And so it wouldn't surprise me actually if they revise. Everybody said, "Oh, they'll never revise
the
target."
new 2,
but I don't think the U.S. Fed will revise the target. But I think that the Bank of Canada, it wouldn't surprise me to hear them say that there would be a revision of the target.
Yeah,
for a bit.
Yeah, I also think too, like, everyone thinks that once we touch this 2, they're just like, Tiff's going to come on a microphone and say we're going to drop rates, but there's no way. Like, they have to be cautious. You can't just flood the economy again with cheap credit. You have to make sure this thing is dead.
Well, it's not, and it's not even like, I don't think they're like, rates are never going back to where they were. Actually, if they do go back there, like, you have far bigger problems to worry about in your life, like the things that it would take to get rates as low as they just were. Yeah. You know, you'd have to have something major 2008 level or COVID level for that to happen. But I think that they will cut probably 2 quarters after they admit that we're in a recession. Like, when we're in a real recession right now, right? If you adjust for inflation, like GDP growth Q4 of last year was 0%.
Minus, and then with inflation, we're in a recession.
Take inflation out of that. Q1, same thing. But you know, when we're in a nominal inflation, like on GDP, in a nominal recession for 2 quarters, they'll say, okay, we're in a recession, and then I think 2 quarters after that, so you'd be in a year of recession, they'll start cutting probably. It does depend on inflation, but like, if things are starting to deflate or disinflate rapidly as a result of recession, which could very easily happen, and you have an extremely hard landing, which like seems more and more likely every day now, then it solves the problem very quick. It creates other problems, but it solves that primary problem very quickly.
Yeah.
There's so many other parts. Like, I don't think food is coming down like anytime. Like, that's
nothing. This is the thing. Like coming down is deflation.
Yeah.
Deflation is something that the governments want less than inflation, right? But it's disinflation. So it's funny, right?
Going back to normal.
No, it's like just growing at a slower pace. Like
interesting.
it's not like
they're not coming down. They're just
cost
not.
of nothing. No costs are ever coming down.
Yeah.
Like
the cost of food. I'm like, there's no way that this is just going to be cheaper, especially with the supply chains and even what's going on, the war affecting where we buy our oil and gas and all of that. I'm like, there's no way that this is just going to be cheaper when we get back to 2%, which is what people assume.
No, that just means that it's only going up at 2%.
And it's
10%.
Yeah.
Like,
It's almost like,
everyone thinks in a recession, these are going to be cheaper, and there'll be more, like, prices can come down for sure based on competition. More supply creates cheaper prices, of course. But I think people think that the cost of everything is so high right now, and we're going to see later this crash and everything's going to become cheaper. And I'm like, it's not the case.
Yeah, that's deflation. And you don't want
deflation. It's disinflation. There's a difference between deflation and disinflation. Meaning it's just not growing as fast.
Yeah.
Interesting.
That's very interesting. Yeah.
Huh.
It's derivatives. Grade 12.
Grade 12 calculus.
Oh, that was actually useful. Well, I think you've dropped some economic knowledge for our listeners, which is awesome. We really appreciate it. But I kind of want to get more personal. Like with you, where you have your hand on all these different things. Like, where do you see yourself in 5 years? Like I see you so passionate about like making content and investing in real estate. Yeah. So I'm wondering, like, where do you see yourself in 5 years?
I don't know. I mean, like to me, like this entire trajectory was like how quickly, or like I always just wanted to have a like meaningful impact on like making housing more affordable in Canada. Honestly, like that was like, and if you look at my entire trajectory, like that's what it always was.
Trying to be that most honest realtor.
Yeah, I mean, I don't even know if that's what I was trying to do. It's just like I just wanted to like help people like with. I think that this industry does need like some honesty, but and I'm glad that it showed people that you can be honest and still sell real estate. Like I think, but I mean, I want to develop affordable housing. Like that's really my goal, right?
Really?
Yeah, for sure.
Yeah.
Like even when I was in university, I got a grant from my university and from CMHC to do affordable housing research from shipping containers, right? Like this is almost 10 years ago now.
From shipping containers.
That's very cool.
Like recycled shipping containers, right?
Yeah. Like have cheaper material, I'm guessing.
Yeah, what was at that point, and then like, but I mean, regardless, like that's kind of just like that's the space that I want to be in, and it's just like I realized that like I wasn't able to enter that space then. What's the way that I can make a lot of money and also get experience in that space as much as possible in that process, and that this is kind of what it was, right? It was trading in real estate, reaching out to people who are doing what I wanted to do, builders, whatever it was, and just asking them like, how can I help you for free, right? Like can I go find you a piece of land? Like tell me exactly what you're looking for. Like don't tell me broadly what you're looking for. Tell me exactly what you're looking for and I'll go find it. And then I could learn the way that they analyze deals through that process and eventually start doing it myself. I mean, and I don't really want to develop in the way that like most people do, like to be sexy and like all that stuff. And like, you know, like I want to develop this, like I've just learned in being a landlord, like we buy like really, really rough properties. Like each one of them like would shock most people. And like, it's not like, then they're ones that we would have inherited from somebody who's probably like a slumlord. Right. And just gradually like fixing up stuff that like makes a meaning, like changing an appliance for somebody, right? Like makes a massively meaningful impact on their life. These are people who are paying like $500 a month rent, unindexed pensioners. If you were to evict them, you know, they actually would have nowhere to go. There's literally nowhere they could find a replaceable unit in the country right now.
Do you keep them?
Yeah, we leave them in.
With the same price? Yeah. So then how does it afford itself?
Because we buy them at a cheap price, and they're in small towns with low entries. And then they just turn over naturally. Like there's a lot of older people, they just want to live out their days. And
so you're helping the units, but not increasing the rent.
Right.
That is very noble.
Yeah.
And then we'll realize the upside. Like, I mean, most of these people, you know, will probably only be there for another 10 to 15 years, and we'll realize the upside at that point.
Yeah. Interesting. So does money motivate you, or now are you just more passionate? Because I found money motivated me at first, and now it's more like the passion of talking about real estate and trying to help people. I know it sounds.
Yeah. I mean, I don't know. It's tough to say. I mean, like, I think it's just, it comes and goes. Like sometimes it does, because sometimes I need money.
Yeah. Sometimes you need a check.
A lot of times, yeah. But and so like, I mean, it's certainly a part of it for sure. I mean, to me, like once you figure out the money part, it's like it's kind of just a game, right? It's really just points. Like honestly,
Money's
right?
a game. Yeah.
Yeah, it is. Like it's just like you're just getting points in the game.
Yeah.
You just have to figure out how to get more points and how to spend less points, right?
Yeah.
And I think once you figure that part out, like it doesn't really need to motivate you so much. Like I think a lot of people will say like, find something you're passionate about or focus on like where you can deliver value and it'll all come. And that's true. But I think like if you also understand like income first activities, like it's a lot easier to solve problems or do the things you're passionate about if you have money, right?
Yeah.
Very true.
And so like, especially for real estate professionals, it's like the biggest thing like that you can't get anybody to do in this business is pick up a fucking phone and make a phone call.
Yeah.
Seriously.
You can't
It's
even
like that meme. It's like realtors will spend a week making a podcast studio and not pick up a phone.
Yeah.
You give somebody a sheet of 1,000 warm leads, they won't call them.
Yeah.
Right.
Yeah.
Like I won't even bring somebody on to train them if they
won't pick up the phone.
Call. That's the first thing. Like,
Do you have
I
a team or anything?
No. I mean, I think that's where like Rare is really fascinating, right? Like you're able to bring agents on into like that structure without having to have that. Like I can't manage people. I don't have the patience, honestly. I don't have the emotional intelligence. Like I can tell people how to be successful. It's really like I could write it in 4 sentences.
Yeah.
Right. It's whether or not you do it. Like it doesn't really take that much after that.
Yeah. It's like the gym, it just sucks. You just got to go do the same minute thing over and over again. And then, you see exceptional results over time.
That's it. Most people don't see the results right away. And so they give up.
That's why most realtors fail after 2 years, 3 years. Yeah. It's probably going to even be quicker now with COVID.
Well, the thing is in Canada is like, you don't get monthly data on like the drop off because we only have like the one gate, which is coming up, right? The insurance big,
right.
It's like $1,600 or whatever.
Yeah.
Or is it? I don't know. Anyway, Rico, whatever the Rico thing.
I saw the email.
It's not cheap. It's not cheap. Yeah.
August, right?
You got to be making money to pay for it.
Yeah. So like, I think we'll see a big drop off, but you look at the States, 60,000 realtors just left the business.
60,000. Wow. That's like all of Treb leaving.
Yeah.
Close to it, right? Yeah.
70,000 Treb.
70,000 Treb.
Biggest real estate board in the world. Most realtors per capita.
Yeah.
And it's like the top 1% does 99% of the business.
Yeah. I mean, I've seen like the list of like the top 1,000 realtors in Toronto, and like the 1,000th, actually from like 800 to 1,000 is 9 deals.
Yeah.
Is
9
deals?
Yeah.
9 deals. Wow.
And that's the top 1,000.
Yeah.
So then most people are doing 1 deal or none.
Yeah. I mean, and team structure kind of like breaks that a little bit, but
yeah, it does. Cause you got the head kind of going on first. Yeah.
Yeah. But I don't know. Like, I mean, I think your 9 deal people, which I don't know. It's tough to say. I mean, like there's a huge Pareto distribution, right? 80-20.
Could you make a living off 9 deals though? You almost could.
9 deals you could, yeah. But that's somebody who's in the top.
If you were by yourself.
Top,
yeah.
I don't know, whatever that is percentage wise, top 10%.
Yeah. You could probably be fine.
Easily, yeah.
Make $100,000 and have 9 deals, and yeah, you'd live a pretty good life actually if you could do 9 deals. But 9 deals are hard to come by, right? It's like it's like anything. You got so many people trying to come after those deals.
To me, it's more like a byproduct, or it's just the fact that like the industry, there's so much collateral damage from people being represented by somebody who's never done a deal, or somebody who's done 1 deal, right? And I don't really give a shit. Like it's somebody's business whether or not they make money or whether or not they should be in the business or whatever. But it's just like, don't screw other people over.
Totally.
By not you know what I mean?
Yeah.
And experience kills. Like
yeah.
It does. Like and it's easy to paint over everything when prices are going up and interest rates are going down for 40 years, but that's not happening anymore.
No, and I think these big teams can almost be a detriment to the industry because they're hiring for volume. Like they don't care if you do, like, it doesn't cost them much for you to come on, right? If you do 2 deals, like you're paid for and then some. So yeah, I think like the interview process for big teams is it should be more scrutinized, and I think it probably will hurt their business in the long run, but that's just my opinion.
Yeah, or it should be more expensive to be a realtor.
I agree. What do you think?
I mean, what
does it cost us right now? I don't know, $3,000 maybe, like just in fees. Like it's not that much. You do 1 deal, you make 10, you bring home 7. Like it should probably cost you $10+ grand a year to do it.
Yeah, it's a broken incentive system. I mean, what other industry like allows you to manage hundreds of thousands of dollars or millions of dollars of clients' capital with insured risk and giving them access to leverage on a $3,500 degree? Nothing.
Or like not even a high school diploma. You need to, if you don't have a high school diploma, you need to write a test to show that you're like competent.
Right.
So you don't even need a high school diploma to be
And what you said there is so true. Like it's like you're literally working with, you know, even our market, $1 million probably.
Right.
And you have,
It's
you know,
it's their biggest
little to no experience in money management. And you're also working at Bell on the side. You know what I mean? Like there's just, it's just crazy.
Well, yeah, you're giving somebody like the responsibility level of an investment banker without KYCs and or like any or SEC oversight or anything. Like and you see it all the time. Like I screenshot all of these things that come across my Facebook ads. It's like guaranteed rents or like guaranteed. I'm like,
nothing is guaranteed.
But when like, but like, where's the Securities Commission on stuff like this? Like, I just don't like. This has been really difficult for me.
People
to see,
get duped. What I always talk about is the pre-con. Like people lining up down the road and just getting hosed. Like the price per square foot, they don't care. You know, they just don't even look at it. They just go, you know, pre-con only goes up. Like it's literally.
But that's like sales though. Like sell anything, and there's going to be salespeople. Right?
Yeah, it doesn't make it right.
Yeah, no, it doesn't make it right.
It doesn't make it right.
Just Balfour, like the you know, selling like the pink sheets. Like this is the same stuff. Like the guy's like, you can't lose on this one. It's like
just people
are writing that in Facebook ads.
Like, you can't lose on this.
Not that, but like
pretty much
stuff. Like I'll send you some screenshots. There's like some
even mad at me. Like I was screaming. I'm like, this is the biggest ripoff ever. It's like 1.6 million for a townhouse in Oakville. I'm like, that is like you're asking $500K over what you could buy resale today. Like, how can they do that? And people would line up and buy them. And it's just, it's not regulated enough in my opinion. But
I mean, like that part, I think like to me, it's just like the sales stuff, right? Like if you have realtors peddling this saying like rental guarantee or whatever. I mean, rental guarantee is fascinating from my perspective. I'm surprised the lenders are even on board with it. Cause like you're basically just like, they'll prepay a year's worth of rent or boost the rent like higher. So if the thing would only rent
a lot of builders did that.
Everybody still does it, right? But it's like, okay, so the rent, let's say the rent's $2,000 and, you know, it needs to be 25 to service a loan. It's like, okay, well, we'll just give you that.
You the 500.
We'll just top up the rent.
Yeah.
Yeah. Cause all you need is your NOI to look good for year one to get the debt on it. Right. Fascinating from my perspective that like a lot of this stuff even exists, like that it hasn't been like, I think as you start to see the consequences manifest as a result of it, it starts to get regulated out of existence, you know, static payment variable mortgage being
one
the first instance. Right?
Yeah. Yeah. Interesting. Well, do you have any more questions?
No, I think that's all for me.
Well, Dan, that was awesome. It was really great. Yeah. You're a ball of knowledge. So we appreciate you. Hopefully you'll come back on sometime. And we'd love to have you back. Yeah. Even bring Nick on or something. We can do something fun. Yeah. Kind of collaborate and grow each other's following. Cool. But all right, guys, thanks so much for watching. If you don't know Dan Foch, we'll definitely tag all of his Instagrams and his TikToks. He's very valuable, and his podcast too. His podcast is great with Nick Hill. If you're on YouTube, please like and subscribe. On Spotify or Apple Music, please leave us a review. And check us out on TikTok and Instagram. That's where we definitely get our majority of views, as people love short form, so you can follow us there. All right, thanks so much for watching.
Guys.
Thanks so much.
Again.
Thanks, Dan. We appreciate it.